First to blast, the last one to dash. Going for the holes in the cash. Fuck you, niggas.
It's your boy Crypto Blood. Welcome to another episode of My Two Satoshis. It is October 2nd, 2019. Oh my God, this is probably top 5 best hip hop songs in my list. Troublesome, Tupac. This is a classic, man. Check. Thank you for that one. Finally, Check doesn't have, guys. This guy doesn't have a YouTube account. He doesn't have any type of account. I'm like, Check, just go ahead and send me a request on YouTube. He's like, I don't have an account. I'm like, oh my God. So shout out to Check out there on the Webbot chat room, crypto chat room. Thanks for that, man. Again, what's going on, people? Hope you guys are doing well. Welcome to another episode. I don't even know what number it is, but it's a lot. I've been doing this for 2 years and some change now, maybe 2 years and 3 months, something like that. But welcome to yet another episode. Today we are looking at Bitmax. There have been some accusations that they've been pumping and dumping. Oh, really? I'm surprised. We'll take a look at what Lunar Digital Assets CEO says about Bitmax and its involvement in pump and dump schemes. If anything, guys, Bitmax is it has a direct correlation and influence on the spot price of Bitcoin over anything else in the markets, to be honest with you. So that's where you can blame manipulation of prices up and down, if you ask me, because those trades have to be paid out in Bitcoin if one wants to, withdraw their funds. So they literally have to go out into the open market and get those physical Bitcoins. Well, not physical, but spot Bitcoins, real Bitcoins. But yeah, we'll take a look at what Lunar Digital has to say about this. And second article out of You Today says Ripple's XRP to be accepted by thousands of businesses because of Bitpay's partnership. Yes, Bitpay is going to be allowing Ripple's XRP token to be available on their platform by the end of this year. We'll take a look at this. Of course, I'll give you my 2 Satoshis on it. And lastly, out of Coinbase to pay users 125 basis points of interest on their USDC stablecoin holdings. This is interesting. I have to look at the money markets and see what they're paying, but this may be something that is enticing to those looking for some yield in this little to no yielding environment we're in, all thanks to the Fed. So interesting to see that Coinbase is doing this. Let's take a look at the heat map. Today we are down almost 1% in Bitcoin. It's literally flatline, guys. Bitcoin is at $8,238. Ethereum is up almost 1% to $177. We've got Litecoin up 0.47% to $55.59. EOS is also up a little bit today, or actually a lot compared to other coins, up 2.6% to $2.98. And Bitcoin Cash is also up a little bit today, up 0.33% to $222. XRP is also up 1.4% to 25 cents. But from a technical standpoint, guys, I don't really have anything for you. I'm still not bullish, though. I tell you that much. We are still clearly below this yellow line that I have drawn, that drew some time ago. 83.54 is that line. We tried, we got above it for maybe 5 or 6 hours a couple of days ago, but couldn't sustain that momentum. So we're back underwater here, people. And the longer we wait, I would say the higher the probability that we go lower here before trying again. And as far as the algo, still long, but man, it's just no action going on right now. So hopefully we can lock in those gains before it moves down, or if not, we'll keep moving up. This chart doesn't really show all of the support and resistance areas and trend lines, but essentially you got a trend line like this going on that we have to breach, and so we'll just have to see if this ever happens. But again, if you look at volume, and this is only on Bitmax, right? Volume is not aggregated when you're looking at it on TradingView. Maybe there is some type of indicator that you can use on TradingView that aggregates volume across all exchanges, or maybe the top 10. But as far as on Bitmax, as you see, the overall trend is us going down. Volume is dwindling, but that means running out of steam to the downside. I mean, we're in a bearish move here. We've been heading lower, right? So from this first drop right here, we've been losing average volume. It's kind of the peaks have been coming lower and lower. So that could be good news for us if you're looking at it from a volume trade. We could be losing all the bears out of the market and the bulls will eventually take over. Let's hope that is the case. And before we get started, just to give you guys a heads up, the next episode from the new series, Ask the Block, will air this weekend. Get those questions in. I think I have at least another 6. So your question, if you submit today, probably won't air on this upcoming episode, but still get them in. All you have to do is hashtag AskCB. And whatever question you have, there are some good ones coming in. So I'm very excited to and looking forward to answering those questions for you guys. You have to be a member, or I should say, I keep saying that, a subscriber of my channel for those questions to be answered. So make sure you click that bell, hit that like, all that good stuff to support the movement. And I will definitely cue your question in. And lastly, shout out to my channel sponsorships. We've got BitcoinConfidential.cc, also SmartCash.cc. They were voted #1 crypto in Brazil 2018. And lastly, Moon Lambo. They have a new website, shopmoonlambo.com. You can save 10% if you use the word CryptoBlood10 at checkout. First article though out of the Bitcoinist, Bitmax accused of arranging pump and dumps. And as I read this one more time, it's not Bitmex, this is Bitmax. So please forgive me for initially saying Bitmex at the beginning of the video, but it says that Lunar Digital Assets CEO bashes Bitmax on Tuesday. Han Woon, founder and CEO of crypto data analyst Lunar Digital Assets, accused the Bitmax team of indirectly defrauding several IEO projects through pump and dump schemes. To avoid confusion, Yoon refers to the crypto exchange platform established last year and currently listed on the 52nd place on CoinMarketCap by daily trading volume. We mention this because Japanese messaging platform Line just launched a cryptocurrency exchange with the same name. Okay, but back to the charges. Yoon claims that Bitmax's market makers weren't concerned with providing liquidity to IEO projects, but rather pumping the prices by buying up their tokens. After burning through hundreds of thousands and even millions in liquidity funds, the buy side lacked the necessary dose of funds, causing the IEO token's price to tumble. This scenario could be noticed with Deep, the token of blockchain-oriented project Deep Cloud AI. Deep Cloud builds decentralized cloud computing infrastructures. The team managed to survive the stoggy bearish market and even raise funds through Bitmax. However, Bitmax's market makers wasted the funds. Interesting. It seems that Bitmax turned to dubious practices after Shane Molitor, a senior executive at FBG Capital, became head of business development at Bitmax. Previously, Shane worked at Gemini and IBM. Yoon claims that Shane lied to the Deep Cloud AI team by voicing misleading promises. In the end, the Deep token went through a pump and dump move and declined dramatically. It goes on to say that Shane had allegedly bragged about their pump and dump tactics from his FBG days. Shane defended their actions, even going as far as to say that they spent $300K on a token buyback program. No, Shane, you nor Bitmax spent $300K on no such thing. The $300K was Deep Cloud's AI's money. Get your facts straight. Well, there you have it. I thought this was a Bitmax, but that still illustrates a lot of these exchanges are still doing a lot of shady things out here. So you need to be careful. To the contrary, though, I will say that I did see a report this morning stating that watch trading activity has plunged 35% as crypto exchanges start to play fair. So, you know, I guess it's a glass half full, glass half empty type of thing. You can look at this, but these exchanges are definitely still doing some real shady stuff. So just be careful out there. I don't even know anyone, at least here in the States. It's probably more of a overseas thing where people are still doing a lot of IEOs and participating in those types of things, because we can't even do any of that here in the States. So a lot of people that I know here don't even participate in IEOs and any of that stuff. Second article out of You Today says that Ripple's XRP to be accepted by thousands of businesses because of Bitpay's partnership. It looks like they're partnering with Bitpay. It says the leading cryptocurrency payment company will allow its customers to pay thousands of merchants around the globe with Ripple's native token XRP by the end of 2019. Here's the tweet here. It says soon Bitpay merchants around the world to accept XRP payments alongside cryptocurrencies like ETH, Bitcoin, and Bitcoin Cash. It says a big day for Ripple. The members of the XRP army seem delighted by the new addition, claiming that Bitcoin is way too slow and volatile to be used as a means of payment. This one guy says, I use BitPay all the time, sick of sending in Bitcoin and waiting for an hour and losing money in volatility. It goes on to say on the same day, Ripple's investment arm Xspring also presented a software development kit that would allow integrated cryptocurrency payments into different apps. Because of the above mentioned partnership, BitPay will become part of the Xspring XDK platform, thus making it much easier for devs to accept crypto. And the article goes on to talk about BitPay adding more choices. Finally, they added Ethereum as a new payment option on September 16th, with the company's CEO describing this as the next logical step. Until that point, BitPay, which was founded back in 2011, only supported Bitcoin and its controversial Bitcoin Cash. Yeah, they're behind in the times for sure. Them adding XRP, not gonna do much, in my opinion. Here's the issue, and I always have to explain this. XRP as a token, if XRP is going to be used as a competitor to the hundreds of other cryptocurrencies out there that are fast, that's not going to be enough, because eventually it's not going to be just about who's faster, but the coins that are really going to succeed in the next 5 years are going to be the ones that are instant and free to transmit. So you're at a zero, you're near zero bound when it comes to the edge you have. I'm talking about like XRP or Litecoin or any of these other coins that don't have something else, another competitive advantage. You know, if you're not anonymity, if there's no anonymous factor to it, even that still coins, there are a lot of coins that have that. So what is going to separate you from any of the other thousands of coins out there, especially when you start having blockchains like EOS, Quantum, even if you want to say Tron? These blockchain 3.0 platforms will have tokens that reside on top of it that are free and, you know, anonymous. POS is an example. It's a private token, a UTXO token on the EOS blockchain. So it can be transmitted with anonymity and for free and instantly. So that's not going to be enough in my opinion. And I think that's what's going to make XRP token go closer to zero. It won't maybe ever go away because they have a huge community, but XRP over time will head lower, probably to 5 cents, 2 cents. It won't probably ever die, but you know, the utility, if that token isn't being used within their ecosystem, their XRapid or whatever, if people, their businesses that they sign up aren't forced to use XRP tokens, then the demand for the token is just not going to be there. And over time, it will bleed out, you know, it'll go lower. Not saying it's going to go to zero, but it's definitely going to go lower. And I almost forgot, I do want to make a correction about yesterday's video. So the Litecoin Foundation did not pay for their 9.99% equity stake in the German bank. I thought that they did. They actually didn't. TokenPay paid that on behalf of the Litecoin Foundation, so that they did have a stake in it. So I just want to make that clear. I was told by someone very close to the foundation about that. So just wanted to clear that up. They did not pay for their equity share in the German bank. Last article, Coinbase to pay users 1.25% in interest on USDC stablecoin holdings. So before we get started on that, I do want to look at current money market rates right now. BMO Harris has a 2.35% interest rate on their money markets, but you have to have a minimum of 5,000 in the account. BBVA also 2.15% with a $10,000 minimum, and it kind of goes down from there. So Wells Fargo is at 1.95. Current money market rates are definitely higher, so I would have to assume that Coinbase is making the spread. They're getting the spread on that. So I don't know. I mean, at least there's no minimum, but I don't know how attractive this will be to people. But we'll take a look at this really quickly. Starting Wednesday, it says customers of the San Francisco-based cryptocurrency exchange can earn interest on their holdings of a dollar-pegged stablecoin, USDC. The annual percentage rate is a yield of 1.25%. They said, we're trying to build more ways for customers to grow their wealth on Coinbase. Yeah, right. No, you're looking to make more money and revenue. Let's not be act like you're all altruistic here. Man, these people crack me up. The users of the exchange with at least $1 worth of USDC in their accounts will automatically begin to accrue rewards on their holdings with no additional costs or fees paid out to the user on a monthly basis. All rewards earned on Coinbase can be tracked in real time and subsequently used instantaneously to buy other cryptocurrencies listed on the exchange. Speaking to the inspiration behind the USDC rewards program, Director of Product over at Coinbase noted that the 1.25% interest rate of holdings of US dollars is 15 times more than the national average, or what people might get through a traditional savings account. Yeah, but you're not talking about money market accounts. That's the trick there. I know most Americans don't have money market accounts, but I guess it's better than that, but I don't know. We'll have to see what happens with this, how many people take advantage of this. It's better than nothing. It's definitely better than sitting in a bank with almost no interest yield. But again, they're making it sound like they're altruistic in their endeavors here. No, they're going to make money on the spread, I guarantee. You can get way more with services like crypto.com. I'm not trying to shill for them. That's the first thing that comes to my mind. You get much higher yields on staking your cryptocurrencies over there. The article goes on to say, while the rates are lower than what a user could benefit from on a decentralized financial application such as Compound or DYDX, Brandsburg said the USDC rewards program makes earning interest on USDC exceptionally easy for customers since they no longer have to move money into a separate application or account. This is true. What do you guys think about this? 1.25%. Better than nothing, like I said, but they're trying to spin it like they're just doing this out of the goodness of their hearts. And we know that ain't happening. And that's pretty much it for today, ladies and gents. Again, shout out to my man Check out there on the Webbot Crypto Chat Room on Telegram for the song requests. Again, my top 5 favorite songs: Tupac, Troublesome, 96. Make sure you guys like, share, and subscribe. And click that bell to be notified about unbiased crypto news reported by yours truly, Crypto Blood. We out of here, people. That's my 2 Satoshi for today, October 2nd, 2019. Holla.